Good day and welcome to Sheela Foam Limited Business Update Conference Call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Thank you, Michelle. Good morning, everybody, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Sheela Foam Limited. On behalf of the company, I would like to thank you all for participating in this conference call to discuss the acquisition of Concall Enterprises Limited and House of Kiraya Private Limited of Orlanco. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's conference call is purely to educate and bring awareness about the company's business and recent acquisitions. Let me now introduce you to the management participating with us in today's call and hand it over to them for opening remarks. We firstly have with us Mr. Rahul Gautam, Managing Director, Mr. Amit Kumar Gupta, Group Chief. Before we begin, I would also like to request everyone to focus their questions related to acquisitions and not anything regarding the first quarter of financial year 2024 results or operations performance. Now, without any further delay, I request Mr. Rahul Gautam to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Michelle, and thank you, Anuj, for the introduction. Very good morning to everyone joining us. It is my pleasure to welcome you all to the conference call to discuss the recent acquisitions announced by the company. I hope everyone has had a chance to review the exchange disclosures, press releases, and presentations that have made or that were made available on the stock exchanges. Let me first start with Concall Enterprises Limited. Sheela Foam would be acquiring 94.66% shareholding in Concall Enterprises Limited at an equity valuation of INR 2,150 crores, with the effective cost of acquisition becoming to around INR 2,035 crores. With this acquisition, Sheela Foam would add strength to the leadership position in the modern mattress segment with a combined market share of more than 20%, should be close to 21%. As you may already know by now, Concall is more than 60-year-old company engaged in the manufacturing and marketing of various foam-based and coir-based home comfort products across the sit and sleep solution categories such as mattresses, furniture cushions, pillows, and coverings. It has 10 manufacturing plants located strategically across India. It also has large pan-India distribution network comprising of 10,000 touch points. We believe there are strong synergies between the two companies, which will not only widen the market leadership position of Sheela Foam, but also cement and safeguard this position in the modern mattress market for years to come. Sheela Foam is a pioneer and leader in foam mattresses, while Concall's strength lies in its rubberized coir mattresses. Together, we would have a much enhanced product portfolio catering across mass and prestige ranges. Sheela Foam being strong in northern and western India, whereas Concall having a higher market share in the southern and the eastern regions of India. The combined entity will enjoy a deeply entrenched pan-India footprint. Both have a complementary distribution network also. Sheela Foam primarily operates through EBOs or exclusive brand outlets, while Concall is strong in the multi-brand outlets. This consolidation would provide SFL with a robust distribution network with significant cross-selling opportunity, whether they are across the MBO points or they are across the various regions of southeast and northwest of India. Sheela Foam and KEL have many complementary manufacturing facilities and which will create significant production efficiencies and cost savings by improving both logistic costs, also create raw material procurement efficiencies. It is just a sheer coincidence that the factories of Sheela Foam, 12 in number, and the 10 of Kurlon do not have a single town where there is an overlap. And that helps in the distribution across the country because logistic cost is an important one. The integration is expected to be completed by 30th November 2023. I must also say that there are some cultural differences which will be important as far as the human integration between the two companies are concerned. Both were promoter driven. One, of course, is listed now, but the DNA remains virtually the same, and therefore I believe that the integration would be not so difficult. Moving to Furlenco, Sheela Foam is investing 35% stake in House of Kiraya, that is the owner of the Furlenco brand, for an equity valuation of INR 900 crores, with the effective cost of 35% coming to 300 crores. Furlenco was founded in the year 2012 and is today one of the largest and fastest growing furniture rental company in India. I must add at this point that furniture is an extremely fragmented category as far as India is concerned. And there are multiple ways where you can interact with the consumer, be it selling new furniture, be it renting, be it buying back, be it refurbishing, etc. And all this is in the portfolio of Furlenco. Rental one is the strongest one that they operate in, and rental is also a good way of understanding and knowing the needs and requirements of the consumer, and it's probably one of the best and the quickest ways of doing it. The company also has offers for sale of new and refurbished furniture under its Furlenco, and they have a brand which is a little on the premium side, and that's called Prava, which they have begun to operate. Those are designed, manufactured, and the products are offered online, but would be a good option to go offline. It has a strong online presence, but is also growing in the offline segment. The Furlenco deal, with help of Sheela Foam, to enter the fast-growing branded furniture and furniture rental market, and an opportunity to further diversify its presence and become a full portfolio company. As per the industry estimates, the furniture market has a significantly large TAM than the mattresses. As per the last surveys that have been done in either of the industries, it appears that the furniture market is at least 5 to 6 times higher than the mattress market, and roughly around 1.5 lakh crores compared to 25,000 crores or 30,000 crores of mattresses. Sheela Foam should benefit from Furlenco's digital-first direct-to-consumer business also, and the e-commerce capabilities that they have developed over the past many years. Another advantage of Sheela Foam and Furlenco coming together is the possibility of offering its products or offering the Furlenco's product on the EBOs and MBOs that we have, and vice versa of Sheela Foam's products, which is the Sleepwell and the Kurlon mattresses on Furlenco's platform for their online strength. This entire integration between the companies is expected to be completed by 30th August 2023. With our past record of acquisitions, and there have been 3 small ones in India, and there have been the 2 big ones, one in Australia in 2005 and the Spain one in 2019. We have not only successfully grown with both these entities or now 5 entities, we are fairly confident of both these recent acquisitions that we should be able to make a success out of them. We believe that over the next 2 to 3 years, the synergistic benefits of both these acquisitions will not only lead to significant growth to Sheela Foam business, but also improve the company's profitability due to the sheer scale of operations and economies of scale. But most importantly, to create an undisputed, strong market leader. I am reminded of 1994. That was the time when we were looking at extending our portfolio. You see, primarily Sheela Foam is a polyurethane foam manufacturer. That is what we do well in India, but we are doing that from 1972 onwards. We do that very well in Australia. We do that extremely well in Spain. And I have no hesitation in saying that whether it's the raw material procurement, it's the technology, it's formulations, it's the products that come out of it, that we can be compared to any in the world. It would be probably, I would say, probably one of the best in the world. Polyurethane foam has 2 major applications. One is the bedding one, and the second one is the furniture one. The bedding one, in 1994, we were looking for, when we were trying to expand our polyurethane foam market, we were looking for customers who would buy foam from us, who would be mattress brand owners, who would be mattress manufacturers, etc., and would help us to grow our polyurethane foam market. Unfortunately, or fortunately, there were none who would want to get into that area. Kurlon was there, Relaxon was there, Dunlopillow was there, but they were not on the foam side. And that time, the stress was on rubberized coir and on latex foam. So we did that ourselves. And since then, we can easily see that how the market has, it took some time, but the market that has grown, and how mattress market has become or is becoming an organized product offering to the consumer. I see a similar situation as far as furniture is concerned today, where we of course make all the intermediate foams and with different grades and qualities, which go into refurbishment, which go into small manufacturers who buy, etc. However, big branded furniture manufacturers who consume foam are just not there. And we see that as an opportunity for us. So Furlenco really is our foray into the furniture market, and where we would have the experience or advantage of the brand. We would have the experience of the strong management team that is there, and then linking it to the input, which is the foam from our side, as well as the point of selling, which will be the MBOs and EBOs, which together Sleepwell and Kurlon would have. I think it's a very strong proposition that will come about. So with those words, I just want to thank you all for participating in this Concall. I hope we have been able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, please reach out to our IR managers, Anuj Sompal from Valorem Advisors is present here, and I understand that there would be some question and answers that we would be addressing right now. So thank you very much, and over to you, Sheela.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Nihal Mahesh Jham from Nuvama Wealth Management. Please go ahead.
Yes, sir. Thank you so much. And first of all, congratulations on concluding the deal. So my first question was that if I look at Kurlon's performance, there has been a fall from FY20 in terms of the margins, and maybe the growth has also stayed flat. No, these are COVID.
Nihal, if I may interrupt, your voice is coming through a little faintly. Is there a possibility of raising the volume?
So, is this better now?
Better.
Apologies for that. Rahulji, I was asking that if I look at Kurlon's performance, there has been a fall in the margins if I compare from FY20. I know that the last 2 years, FY21 and 22 were COVID impacted, but if you want to highlight about what has led to the contraction in the margin performance specifically for Kurlon.
So Nihal, yes, you're right that the margins have fallen. And there was a change in management, and they were looking at some transformational changes as far as Kurlon is concerned. And by the time they planned and began executing them, we ran straight into COVID. And COVID, of course, everyone was impacted, both on the cost side as well as on the revenue side. And then all these changes could not be done. And then, of course, there was a little bit of a situation created where, you had to probably leave out a few of them. And those had been primarily responsible for this drop in margins. As we get out of COVID, or the COVID-like situations, and as we get into not being wedded to the changes, etc., we will very quickly get back to the levels that they have been of close to 1,000 crores as top line and 11-12% or even higher than that EBITDA.
Sure, Rahulji. So were these initiatives a reason for the increase in the cost base which you plan to reverse, or is it that these initiatives will now be implemented which will lead to, say, growth normalizing and, say, the margins also normalizing?
I would say that there would be a complete review of these changes, and some of them would be good, in fact beneficial, but there will be a few of them which doesn't make sense, and there would also be a few changes that will come out with the two companies coming together. There may be some altered options or changes that may be there, whether it's on the manufacturing side or the front side.
That is helpful. My second question was that on the cost synergies, I think you've highlighted you're looking at a 4% improvement, 2% split between on the raw material side and the other two basically on logistics and other aspects. Coming to the revenue synergies, could you give a sense of what are the angles you're looking at? Because Sleepwell as a brand is primarily selling via its own EBO network. So maybe that cannot look at cross-selling Kurlon. So is it mainly the feather foam brand being stepped up via Kurlon's distribution? Is that the main revenue synergy that you feel this this acquisition could drive?
So let me just understand the question. You're saying that because Sleepwell sells primarily through an EBO network and therefore any cross-selling would be a difficulty. Is that correct?
Yes, I would believe that selling Kurlon via our Sleepwell EBOs or vice versa is not something possible. I'm assuming that the main place where the revenue synergy could come through is using Kurlon's distribution to upsell feather foam. Would that be a right understanding?
I think this entire issue will be revisited on how we want to structure and through what that where do we sell our product. I'm not bringing feather foam into the picture at the moment at all, and I would say that we should restrict to the promoted and advertised brands and the consumer brands as they stand, which is both Sleepwell and Kurlon. Our attempt, and look, it may be a little premature for me to say, but our attempt is to recognize the differences between the two, to celebrate those differences, and to figure out that how can we make a clearer proposition to the consumer. Now, how will that change as far as leveraging the places where they are sold? It may take a little time to figure that out, and there can be a mix of many things happening. It will also depend on zone to zone, and for example, if we would look at East Zone, where yes, we sell through EPOs, but we are present in a very few numbers that are there, and it may not be difficult at all to look at a kind of a combined possibilities. So I think those are just being worked out. I would request that if you can sort of hold on for about a couple of weeks, we will be able to unfold the entire plan there. But there would be cross-selling possibilities almost everywhere.
Understood. I'll just take my final question in this round, if that is fine.
Mr. Jam, I would request you to kindly read.
Sure, I'll come back in the queue.
Thank you, sir. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. We have the next question from the line of Dhananjay Pakudia from ASK Management. Please go ahead.
So maybe I missed this. Firstly, congratulations on this acquisition.
I'm sorry to interrupt. Sir, your audio is too low. I would request.
Can you hear me now?
Yes, sir. Please proceed.
Yeah, okay. So wanted to ask, maybe I missed this. Will the two entities be still selling separately, or how would that be taking place? And B, now with the combined entity, do we see growth rates improving as we move along? Because as growth rates have been a little tapered for the last few years.
Dhananjay, I am sorry, I heard them very faintly. Could you shout a little, please? Yeah.
Hello, can you hear me now?
Oh, clear. Great, thanks.
No, firstly, congratulations on this acquisition. Maybe I missed this earlier, but will the two entities be selling separately, or will it be considered, will be all the brands now be renamed for Duroflex, and for Kurlon be renamed into Sheela Foam, and we'll be selling it as one? And secondly, now would we see growth rates significantly improve, because that's been a little pain point for us for the last few years?
Okay, so the first question, as I understand, is that will the two entities be working together or selling together? Look, these are few things. Again, I would suggest and request that if we give it a few days. We are also taking some professional help on these matters. There are companies which are national as well as international who have experience on this issue. There have been such kind of mergers, such horizontal mergers in the past, and some of them have done phenomenally well. And therefore, we just need to understand that part. But, just to give you a principle, as I was telling Nihal, that our aim is not for them to go out and compete against each other and not be conflicting as far as the sales part. We would ideally like that both of them support each other and make the offering. And therefore, there is a need to position them properly. And that's an area that we will be working on. That's how it was done nationally. There have been, of course, also national examples like, I think, more in the luggage space where you have Aristocrat and Sky Bags and VIP and American Tourister, etc. And if you just look at Sky Bags and VIP from the same stable, but completely different, and and therefore continuing on its fourth path, no conflict, but actually helping each other. So I think something like that, but just give it a couple of weeks and we'll get back.
Okay.
On the second one that you talked about, the growth rate part. So the growth rate has been a combination of a couple of things. And in the past, it's been, whatever happened during COVID times, then subsequently people have reduced buying. There has been a push for ASP to get lower, and therefore the unorganized sector getting a little more active. However, and of course, there was inflation. As all these things are beginning to fade out, these growth rates are bound to rebound, are to come back. Whether it will happen now or it will happen close to Diwali with the impact of the monsoon, etc., and all the other things, as I said, going away, we'll just need to wait and look at it. But the signs are very ominous.
Okay, sure. Thank you.
Thank you. The next question is from the line of Varun Singh from ICICI Securities. Please go ahead.
Yeah, hi. Am I audible?
Yes, sir. Please proceed.
Okay. So thanks for the opportunity and congratulations for the acquisitions. So my first question is, I understand that the acquisition would be 300 basis point accretive to EBITDA. But if you can share some calculation with regards to EPS, you think this acquisition, both the acquisitions would be EPS accretive for existing shareholders?
So let me just say this thing, that even this 300 bips number that we have got, this has been a talk, this has been expectations, this is probably, but as things would unfold, this may alter a bit. On the EPS part, I would just say that, again, it depends on the kind of debt and equity that we would be using to, or the cash that we would be using to fund this. I think, or I can make a guess of saying that there may be a little bit of a fall for a short time, but it will soon pick up, and it should become accretive in a few months' time in any case.
Okay, understood. Okay, fair enough. And regarding 7 to 7.5% net profit margin that we have seen in Kurlon pre-COVID, I understand you highlighted that the new management could not implement or execute their strategy well due to COVID. But now that FY23 was an year which was free from COVID. Two questions on this front. If you can highlight what was the strategical change which was effected into the business. And of course, FY23 should be a reflection of that. If you can throw some light on the strategy, change in strategy part, and also with regards to the 7 to 8% net profit margin, which is equivalent to our own company, the sustainability of that margin going forward.
So let me just say this, that as far as what did not work and what worked at that time, it may be, one wouldn't have enough details or knowledge to share with you that exactly what. We have a macro level picture on it. We know that what is going to continue to work in the post-COVID era, and what will not work or what will be changed, because the two companies are kind of coming together. We will be drawing up a detailed strategic list, and I think you will have to just wait for a couple of weeks more for that to see. Getting it back to its pre-COVID levels should be easier done possibility, and whether FY23 will reflect that or not. Look, the transaction has been done, but it has not been closed as yet. It will also close in the next 2.5-3 months or so, and then that will happen. But I think you can be pretty sure that things should be back to that level or in an improved version as far as FY25 is concerned, because a couple of months going away for things to kind of settle down. And the detailed strategy, we will be having the earnings call, of course, in the first week of August, and then subsequently, every quarter, we would keep informing you as to how things have unfolded and how we can do that. Just kindly bear with me for some time.
Understood. Very, very clear, sir. Thank you very much. And sir, just wanted to confirm.
I'm sorry, Mr. Singh. We have lots of people in the queue.
Absolutely. Yeah, no problem. No problem. Thank you. Thank you very much, sir. Yeah.
Thank you. The next question is from the line of Nalin Moniz from Edelweiss Asset Management. Please go ahead.
Yes. Good morning, sir. I wanted to ask you about money going into Furlenco.
Can you just speak a little louder? Somehow.
Yes. Am I audible?
Better. Thank you.
Yes. My question is regarding Furlenco. This 300 crores that is going into Furlenco is going to be, what is the split between retirement of debt and growth capital? And for the growth capital, where is that going to be used? And my second question is, what is the plan to acquire a majority stake at some point in Furlenco? Is there a roadmap in place on that?
Sir, I'll take the first question. So this is Amit Kumar Gupta, Group CFO here. So the 300 crores that will go into the company is totally primary infusion, and broadly, you can say 50-55% would go for the retirement of debt. The remaining would be with the company for growth capital. The company is currently having a lot of orders which are to be serviced into, and that is what the growth of business would lead to the profitability of the company. So, and that's why we have decided that all the capital which would go to the company would go in the form of primary capital.
And on raising your stake in Furlenco?
Okay, Amit, so I'll take the question. So currently we have 35%, and we have another option of 9% at the same valuation to be exercised within 1 year. And that option we will take in 6-7 months down the line, or a couple of months down the line. That would raise it to 44%. There is a PE fund which is there, which will be holding 26-27%, and their time is now coming to an end, and from 24 onwards, FY24 onwards, or calendar year 24 onwards, they will be looking for exits, etc. So, and besides these two, there is the promoters who hold about 12%, and then there are multiple investors, very small, close to about 60-70 investors who hold very small shares. Most of the investors have also expressed their view to sell. Some of them, of course, want to stay and see the value increase. But if the day that we decide that we want to go into a majority one, we have the options to do that, or we will have the options to do that. But at the moment, we will be the largest one there. We would have the board, etc., being controlled, and we would also get a feel for the business and for the industry, and then we can take our calls as we move forward.
Thank you.
Thank you.
Thanks.
The next question is from the line of Arjun Khanna from Kotak Mahindra Asset Management. Please go ahead.
Thank you for taking my questions. I have a few. I'll just go through them. First, on the acquisitions, in terms of EPS accretion, in terms of EBITDA, we would be consolidating Kurlon, but for Furlenco, I would assume being an associate. Is that the right understanding, or do we have management control on Furlenco?
So, at the moment, this is a little question that we would be we would be probably answering in a few days' time. We have raised that question, but I think just the definition of saying management control, I think it also requires that by management control, what do we mean? Is it just a breach of a board matter, or is it that you have 100% all decisions being taken on a daily basis? So I think there is a bit of a gray area there. Most probably, Amit, you may answer that, but most probably I think it will be like an associate company for a while at least. Is that true?
Yeah, right, sir. So currently it will be treated as an associate company, and we would not be doing a line-by-line consolidation.
So sure. So before we say it'll be accretive on EBITDA, but EPS obviously we would be consolidating. Hence, you're looking at FY25 EPS accretion. Is that the right understanding I have?
Yeah, right. So it won't affect your EBITDA, either positive or negative, but as soon as it gets into a positive PAT environment, it would be adding to the EPS.
Sure. Secondly, sir, if you could help us understand in terms of the integration, you talked of the cultural integration. Ourselves at Sheela Foams, we've got a new India CEO, we've got a new CFO. So in the sense, how do we look at in terms of management bandwidth, in terms of acquisition, in terms of the cultural fit with Sheela Foams for Kurlon and potentially for Furlenco going forward?
So thank you, Arjun, for asking that question. That is, I think the more you do, the less it is on that part. Number one, we have, or just about to appoint a leading consultant for the post-merger integration, and this is a practice which is internationally as well as nationally well understood, and I will disclose the name before we do that. But it is time. We've had presentations from the top people, and I think the need and requirement for that is there. So there will be a structured integration process for the three that will begin to happen in a week's time. The second part, how will we structure that integration? Will it be a corporate to corporate entities existing, or will it be a back end to a front end kind of integration? Most probably the latter, so that the synergies can come about easily, and the front end, the growth can be at the moment we have decided that we will not be conflicting the brands, or we will not be working towards let them fight it out in the market, but more to be complementary to each other. And to do that, it may be better to have the front end kind of united and the back end united. But let me just say, Arjun, that it will, in the next 2 weeks' time, things should hold. But we are taking professional help. The other point that you made was on the resources or the bench strength, so to say. We have a couple of more people on a senior level joining into the company to strengthen the working. And our attempt will be that the integration process is not done by the regulars, and they follow or they do what they need to do as far as the existing business is concerned. But the complete clear blueprint, as I said, will be in about a 2 weeks' time.
Sure. Looking forward to that. Just the final part in terms of funding for this transaction. Could you help us understand how do we expect to do the same? And in terms of low-hanging fruits, what do you see the time? What are these low-hanging fruits potentially that we could quickly realize? And what is the scale of the same? That's it. Thank you.
So Arjun, as far as the funding part is, Amit, you respond to that. The second question I will respond on the low-hanging fruit. So first you go ahead and speak on the funding part.
So on the funding, we have a total requirement of say around 2,350 crores for both the acquisitions, out of which around 800 to 850 crores is on our balance sheet. And the rest would be funded through a combination of debt and equity. We basically want to keep debt at the minimal. So we will be looking into as to what is the most optimum leverage ratio such that there is no impact on the rating of the company, and basis which we would decide what would be the component of debt to equity. But broadly, you can assume that say around 2 to 2.5 around in the first year, gradually reducing to below 2 in the subsequent years.
Okay, thanks. So on the low-hanging fruits that you mentioned, there is the back-end side. And on the back-end side, there are some things which can happen very quickly. For example, volumes of purchases on the raw material side. Integration of stuff like as far as manufacturing of foam is concerned, or manufacturing of coir and coir products are concerned. And how do we so that kind of just a little bit of shifting around, just a little bit of talking to the suppliers, exchanging formulations, exchanging manufacturing, all that will happen very quickly. I assume it will end up in less than a few months' time, or less than a 3 months' time. That should happen. As a first principle, we are saying, let me use a phrase like "do no harm." Let things be as it is. What we are looking at the combined entity, the resources as we see, the human beings as we see, and the plans that we would have, there is absolutely no worry on anyone to be disengaged or anything like that. On the other hand, we would need people to be hired and help and support in the other part. The more difficult one, so back-end part of integration, I see that happening in a couple of months' time. The front-end part of it, because it involves places of selling, it involves some changes of a few structures here and there. I think the real benefit will come in FY25, but some changes will start happening from, I would say, from January onwards.
Thank you, sir. Thank you. The next question is from the line of Harsh from Altmount Capital. Please go ahead.
Hi, sir. Basically, my question is regarding to your acquisition and your investment in Furlenco. So basically, as you have told us that you're investing 300 crores. So are you also planning to do some debt investments, or do you have any already any existing deadlines with the company? That's the first question. And the second question is regarding that since Furlenco is already in a rental industry and you are into a selling industry, so will the interest not cannibalize here? Like your mattress selling would be there's a rental industry of mattress. So I feel that maybe you could just give us a small enlighten us on this cannibalization part.
So, Harsh, I'll take the second question first. And the first question on the existing debt line or line of debt or etc., Amit, you can respond to it. So, listen, I said that Furlenco is doing that on a rental basis, number one, but they are a full portfolio furniture company, which means that they do design, they do manufacture or outsource, and internally there is some manufacturing. They do rent, but they also offer to sell. They get the buyback. They also do refurbishing. So the entire gamut of stuff is being done by them. And therefore, there is no conflict that will exist. Whatever mattresses that they are renting, number one, they will be people are curled on mattresses. But that's a small part of the entire household stuff that they rent. So it includes the bed, it includes cupboards, it includes dining set, it includes all the stuff that is there. and therefore there is no conflict. The selling part that Furlenco is doing, they have one offline, the other one, the second offline store coming up, but their products will be selling on the Sleepwell and the Kurlon stores soon. So again, there is no conflict at all that will be there, and there will be no cannibalization, not at all. On the other hand, there will be complementary support that should come in. On the deadline, Amit, what do you want to take this one?
Yeah. So, basis the working capital gap that is there in Sheela Foam and Kurlon, we can draw working capital to the extent of 200 crore plus at any point of time. We have the credit lines in place, and they can be drawn anytime when it is required. Does that answer your question, or was there something else to it?
So basically, I just wanted to understand if you already have a lending line with Furlenco, or are you planning to go that side as well?
No, so we don't intend to fund Furlenco through debt. We don't have any lending line with Furlenco.
Oh, great. Okay. Thank you so much.
It has its own lines, which it has taken from banks and financial institutions, which of course would go down once we infuse primary capital into the company. But going forward, in case Furlenco needs more money, which we don't anticipate, they would have sufficient lines on their own.
Understood. Thank you so much, sir.
Thank you. The next question is from the line of Anirudh Shetty from Solidarity Investment Managers. Please go ahead.
Yeah. Hi. Thanks for taking my question. So my first question is around, I just wanted to understand, how do you guys define your business model? Because, it seems to be that the business is evolving, over time it has evolved by, as well entered into new geographies and, you'll intend to enter into new categories as well. So, how do you guys define your business? It'll help me appreciate, the vision that you guys have for Sheela Foam. And also, how do you guys manage complexity? Because as of today, you are now in multiple categories, multiple geographies, you'll have multiple plants as well. So do you think that this complexity is manageable? So that was my first question.
So thanks, Anirudh. Number one, as far as geographies are concerned, I just want to say that if you look at the company, it started off being a manufacturer of flexible polyurethane foam, which is basically a cushioning material, goes into other businesses. However, there are two major end users, which is one is bedding and the other is furniture. Bedding, because as I said, 94, 95, nobody else came, and therefore we started our own and we created that. Furniture, we intend doing that right now. When it comes down to an international location, we would stick only to manufacturing flexible polyurethane foam, which is based on machines, technology, and sourcing of raw materials and formulations that we can share with each other. We would not enter into a consumer business in a geography outside of India, because we don't understand the consumer there and we will not do it. Any consumer business in India, we would definitely look at it, but at the same time look at the most peripheral first. I think one thing as a company is the focus that we have laid on the product or the segment that we operate in. Let me share with you that in early 2000s, when dot-com companies were in vogue and everyone said that if you're not in that area, you are dead, etc. We did not invest. Few years back, realty business was absolutely real estate business. Every company of any genre was doing it. Did we do it? No, we didn't do it. We don't want to do it. We will want to stick to, at the moment, mattress, furniture, because these are the two main applications of the core business, of the business that the company understands very well. Little addition, little on the periphery. For example, if you make furniture and you make mattresses, Would there be any top of the bed kind of stuff that may come in, like bed sheets or duvets or quilts or that could be looked at. But at the moment, we don't have any thoughts on it. We do have some sleepwell bed sheets and sleepwell quilts, etc., which do sell very small, minimal quantities. But expanding into anything else is at the moment not in question, or not even being discussed. Or we don't have any ideas of that. So that was that part of it. And that's how we deal with complexity. And you are quite right, it's getting more and more complex as time goes by, but we have a simultaneous, at least a thought of simplifying things as we move forward. And that's the reason that I said, even on Kurlon and Sleepwell, how do we position themselves, the two brands, so that they have their own grounds to stand on, they don't conflict with each other, and there is less and lesser of complexity that is there.
Got it.
I don't know.
And no, that really answers my question. Thank you. And so my second and final question is, right now, post the acquisition of Kurlon, we are a very strong organized player, stronger in fact. The unorganized or the unbranded still, dominates the industry. It's been losing share, but it's still anywhere between 50 to 60%. So one is can you just explain the customer's mindset today, which explains why they still keep going to these unorganized and unbranded players? And now that we are an even stronger organized player, what steps are we looking to do, whether it's steps that we've done in the past or anything else that we could do differently to improve the market share that we as a leading organized player have?
Okay, so let me begin by saying that 60% of the country still sleeps on some traditional products like cotton mattresses, daddies, tattais, etc. 40% is the modern mattress market. Slowly, the traditional is shifting to the modern mattress. Sheela Foam is the biggest author of that action, which we started 3 years back, but because of COVID and the Ukraine war, it stopped. November, we would be making a product which is a modern mattress. It is affordable, it is accessible, and we should be able to distribute right up to the village level or the tehsil or a block level. That's one part. That's the 60% part of it. 60%. We have a sizable number which is the unorganized sector and something which is the organized sector. Both us and Kurlon operate in the organized sector, but the larger one is the unorganized sector. There is again, as time goes by, as GST came, more formalization of the economy and all that happening, people are shifting from the unorganized to the organized. However, during the COVID, post-COVID, inflation time, etc., there was a little increase in the sales of the unorganized one. Number one, the organized ones didn't do their work enough because of the disruption, and second, because of an average selling price being low. That issue is changing. It's changing back because eventually everything has to get into an organized sector. We as a company, number one, we would advertise, promote, give guarantees, warranties, ensure that the right products are there. Those are the steps that we do. And it has benefited in the past. It will benefit in the future. But there has been a bit of a disruption, though. So that's how we intend dealing with it.
Got it, sir. Thank you so much for answering my question.
Thank you. The next question is from the line of Pallavi Deshpande from Samiksha Capital. Please go ahead.
Yes, sir. Thank you for taking my question. I would like to know what would be the market share for Furlenco, and second would be on your international location. So I understand now you will be only doing manufacturing, but what was the reason for the doing the consumer business in the past in the international market?
So I would not be able to tell you. I think you asked the question of market share of Furlenco. I mean, it will be in decimal places, so I'll not be able to tell because, as I said, the furniture market is very fragmented. It's 4, 5 times, 6 times bigger than it's about 1.4, 1.5 lakh crores market. And in that, what Furlenco would be doing is negligible, nothing. And therefore, I can't even guess what it would be. However, because it's negligible, I think the potential exists for the balance part to be done. The other question I didn't understand, or whatever I understood, was that why are you not in the consumer business outside the country? It's just because of the consumer, the culture, the setup, the languages, the way that people buy products, etc. And above all is the issue that where we manufacture, for example, in Australia, we manufacture foam. The mattress brand owner and the mattress manufacturer is already fixed for years together. He in turn sells to a retail chain of stores which are all a brand unto themselves. For us to try and get into the consumer business, we would be rapped on our knuckles straight away, and we would be told not to do it because we cannot compete with our customer. And therefore, that's another big reason why we will not do it. But the bigger one is that we don't understand it. We don't understand that culture, and we are not present there for let's say generations to know that. So at the moment, it's a no for us.
So just actually my question